Good morning, and welcome to episode 178 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, June 12th, 2024. Ukraine has made some advances on Russian forces with the help of NATO weapon systems. In the Mideast, Israel and the Iranian-backed Hezbollah have been trading rocket fire. Yesterday, domestically, in Wilmington, Delaware, President's son, Hunter Biden, was convicted on gun charges. The NASDAQ and the S&P both made new all-time dollar high records yesterday. The Dow lagged slightly behind. It was been widely reported that China has officially, and we never know with them, but they officially have stopped buying gold, at least temporarily, in the month of May. That kind of shocked the gold markets. That, coupled with the hotter than expected labor figures last Friday, dealt a tough blow to both gold and silver. They both pulled back short term, and as a result, those numbers are very, very different than what we saw 2 weeks ago. And let me share them with you because it presents an opportunity. Gold today is at $2,313.70 an ounce. That's down 1.4% from 2 weeks ago, where it stood at $2346.50. Silver down 7.9% to $29.47 this morning. 2 weeks ago, it was $32 an ounce. Platinum down 9.8% to $958 today. 2 weeks ago, $1,062 an ounce. And palladium, like silver, down 7.9%, trades at $912 an ounce. 2 weeks ago, it was $990 an ounce. With silver falling deeper than gold, you would expect it takes more ounces of silver to buy that ounce of gold. Your gold-silver ratio today is up to 78.51. 2 weeks ago, it was 73.33. And last but not least, the U.S. dollar is holding steady. It's down 1 penny on the index, 104.74. 2 weeks ago, it was 104.75. So the big news today is we've got CPI coming out. Forecasts suggest that will tick up 0.3%. Again, still going the wrong direction, which will potentially have an impact on the Fed's decision today with their Federal Open Market Committee. Their rate decision is expected to be a non-decision. They're not going to raise it. They're not going to drop it. They're going to leave it standing pat at the current rate, and they expect to hold that higher for longer. That's the verbiage we expect to see as we try to get back down to their 2% figure, whatever that means. In the end, you've heard me say this before, and the one takeaway I want you to have this morning is it really doesn't matter what the Fed does. It has no impact whatsoever. It may have some people chase rates, for easy money between currencies, but in the long run, they can't solve our problems with rate manipulations. Congress needs to solve our problems. Congress needs to go ahead and balance the budget. And a balanced budget is not enough. We have $35 trillion in debt. They can't just balance the budget. What they need to do is they need to generate a surplus year on year. They need to generate a climate where business thrives so they can see tax revenues increase as spending drops. That's how we get out of this situation. That's how the dollar gets stronger long term. And I've said this before, at least right now, there is no appetite in Congress for them to do so. As a result, this dip in gold and silver is a fabulous opportunity to buy your gold, your wealth insurance cheaper than you ought to. It's a fabulous opportunity to get in lower for your silver for profit and therefore increase your silver profit potential. There's no better way to keep what's yours than to buy precious metals right here and right now. Make no mistake about that. As always, we like you to go ahead and follow us on YouTube, sign up, like us, send us your comments and questions, follow us on social media. Take our twice weekly, always something interesting alerts, our once monthly information line newsletter. But in the end, don't ever forget that getting rich starts with keeping what's yours.
you.